Good afternoon, everybody, and welcome to this weekly analysis session for the US of A on Monday, the 18th of April. Let's get underway. A disclaimer: the content of today's presentation or any other Elite Traders Club material does not constitute a recommendation, nor does it take into account your investment objectives, financial situation, or particular needs. As always, before making an investing decision based on the general advice presented in any of our presentations, you need to consider whether the advice is appropriate in the light of your financial circumstances or seek further advice on its appropriateness. All right. Again, the agenda, we'll go through and have a look at, see what the market risk is telling us at the moment. We'll have a look at the benchmark index, that is the S&P 1500. We'll look at some specific setups and also have some time for some Q&A as well. The S&P 1500 for the time being, we are still in low risk mode. Very interesting to see what the markets dish up as we speak. It doesn't feel like low risk, but certainly that's what our indicators are telling us. And so that means that if the US market is your primary market for investing, it means that you can allocate pretty much, if you're doing direct shares, the vast majority of your capital. Remembering it's very difficult using the value at risk model to get much more than around about 8 to 10% of your value at risk into the market, because you simply run out of cash. So just something that you need to consider, and as an easier version, if you like, just using the market risk multiplier to tell you how much of your capital you can be allocating to the markets is probably a simpler way to interpret it. All right, again, if you've got any questions for that, please give us a call. So we'll go across and have a look at the markets this particular week. There are 12 new setups that I managed to find. There was 3 cancellations from the previous weeks. There were 2 trades that triggered from last week as well. We were able to trail the stops on 4 existing positions, and there was 1 stop out as well. So might go across and have a look at our markets now. And let me just maximize that screen a little bit. So there's our S&P 1500, and you'll see that, you know, over the last few months, I've just drawn these sort of major points of supply in the market, and just wondering whether or not coming up to these previous levels, whether we're going to get this old level of supply having an impact on the market or not. Certainly, the market's been very, very bullish of late. And as a result, it's dragging our stochastic further and further up to the lower and lower risk side of the markets. But every time that we've managed to meet low risk previously, we've really struggled to hold that level before falling away. And, you know, I guess the jury's still out whether or not we've got enough left in the tank for this market to continue moving onwards and upwards. What I've got down the bottom here, and I've had this on the chart for a while, is just a volatility indicator. So this is really just based on the ATR of the overall index, and it's just a useful tool to give us a little bit of an idea as to what happens to the market when volatility starts to increase and when it starts to decrease. And it's interesting, if you go back over a period of time, the general rule of thumb for the market over the broader time frame, particularly if we go look at it on a weekly perspective as an example, is that we get these nice broad moves when volatility is reducing. Okay, so that's something to think about in terms of overall portfolio management and the sorts of conditions that are conducive to trend following. So when we start getting high volatility, and volatility starts to increase, it's interesting to note what happens with price action over the same period of time. And so just keeping that as just something in your backup arsenal, if you like, if you're ever worried about what you think the markets might do, and given that we never know what's going to happen, it's certainly worthwhile considering, you know, what's happening with overall volatility. And if volatility on average is starting to increase, what impact is that having on the broader market? So you'll see from 2012, volatility had generally been declining and the market had just been rising really, really nicely. And you'll remember that during that time, lots and lots of stocks just went up, you know, some many hundreds of percents over that period of time. And it was just a matter of having the right sort of trade management methodology along the way. now we're at a position where volatility is now starting to increase over a period of time, and our market is really struggling to get any headway occurring at that particular time. So just something for you to consider into the future as well. All right, so what we might do now is go through and have a look at some pendings and any adjustments along the way. So last week we had ELS, which was still in the pending list. Excuse me, that's just been cancelled. We've just recently now formed a lower peak. And so our price action model is now, it's not going to meet those particular criteria, so that's going to come out of the pending watch list. So that was a cancellation. NDAQ as well, for exactly the same reasons. And again, that putting in a lower peak as well. So NDAQ coming out, and the other one was PNRA. Again, all for exactly the same reasons, all putting in lower peaks. And so therefore, wherever this new trough is going to form, is it going to be at or above what will then be the second from last peak? And the answer is no. And so therefore, they need to come out. You'll have to excuse my voice. I'm just going to have a drink. I've got a touch of the lurgy this particular weekend. All right, so they were the cancellations from last week. There are a number of new setups which I think we might go through. The first one, in actual fact, I think the easiest way to do this might be just to go through straight from the watch list. So I'll just close that pendings watch list and open it up, and then we can go through one at a time. So ELS, that was the one that we just talked about. A cancellation, NASDAQ and PNRA. So here we go. Here are all the new ones for the time being. This is one from the previous week as well. It hasn't yet triggered its particular level. We haven't got up to the $200.44 at this point, so we're just waiting for that one. So that was already previously in the list. This is the first cab off the rank, ASTE. In terms of price action, just putting in last week's candle, creating a new short-term uptrend. As a result, forming a new medium-term trough as well. That trough well clear of the second from last medium-term peak. So the only other thing for us to consider, given that our relative strength comparisons have all ticked the box, our trends are all in the right order, this has obviously been going sideways for a period of time, is just to scroll out and see where we are in the broad scheme of things. And we do have a peak here, but it's way back in 2007. So it is quite a long period of time ago. And with this, whilst it does actually meet the price action criteria, it's the price action was really a little bit all over the place. So it's not one that personally I would perhaps take just because of that. We're just starting to move up, but it does tick the boxes in terms of the price action, etc. So I'll put it in there for just so we can watch and see what happens. But certainly there are better examples this particular week. So non-stop order there at 48.21 and a stop loss in at 41.92. The next cab off the rank is BOH, Bank of Hawaii. And again, been going fairly flat for a period of time. It had been sold off through the beginning of the year, through January, but has since rallied back with the rest of the market. And again, last week's candle putting in or creating a new medium-term trough, which is certainly at or above the second from last medium-term peak. If we do zoom out and have a look at this one, you'll see that there was a long-term peak way back in 2008. We've actually gone past that peak. In terms of where we are now, or just about to rather. So we've had tests of this particular level previously through here, and this is obviously a long-term peak as well. So we certainly need to be respectful of that and give way to that as well. So if we're going to take this particular setup, then what we want to do is just set an on-stop order 0.5% above that long-term peak, just making sure that whilst we have already had a test, and remember a test is coming within 1% of this last long-term peak, we want to give it the benefit of the doubt, so erring on the side of the caution and putting an on-stop order 0.5% above that level. So we have an on-stop order, in this case at 70.42, and a stop loss at least 2 ATRs below that level, and that has a stop loss coming in at 63.97. That's the Bank of Hawaii. The next one, CPRT. So let's just zoom out and have a bit of a look at what's been happening with this stock. This stock's actually a little bit better setup, I think, in terms of overall price action and structure within the market. And what I mean by that is that we've had a long period of consolidation where, price has really sort of gone sideways, but more recently, we've had a move out of this range, if you like, or this sideways zone, moving out, coming back and retesting and moving strongly last week as well. So in terms of pedigree, personally, I think a lot better setup. So all we're really wanting to look at now is obviously, are there any obstacles overhead? Well, no. You can see it's been moving sideways for a considerable period of time, so stagnating. The market's really just trying to decide what it really thinks of this particular stock, and now, more recently, moving to the upward side, which is a positive sign as well. So, from that point of view, price action is ticking all the requirements. The last trough at or above the second from last medium-term peak. We've just got to place an on-stop order. You'll notice that the last candle has already slightly passed that last medium-term peak. I'm quite happy with that. Again, our two ATRs from where our entry point is are sitting well below that last medium-term trough. So in terms of sort of volatility and how much this particular stock moves up and down, that meets the bill as well. So we have an on-stop order at $42.75. And a stop loss there at $39.23. That's on CPRT. Next cab off the rank is CVG. So let's just zoom out here and have a look where this has been historically. There was a long-term peak all the way back in 2007, and the price action on this one, we've actually come up and passed those particular levels now quite comfortably. We've done that over the course of the last few weeks. Well and truly past that long-term peak. And so now this is just a medium-term peak. We've put in a new medium-term trough, which is well clear of the second from last medium-term peak as well. Plenty of overhead space for this one to move. Good relative strength for a long period of time. And as such, we just need to break this last medium-term peak. So I have a non-stop order at $27.97. Protective stop coming in there. Again, outside two ATRs. And remembering we need to be at least 0.5% below that last medium-term trough. So our stop loss coming in there at $25.53. That's CVG. Just grab another drink there. The next one, Honeywell International. And again, really interesting to see, a number of stocks making all-time highs whilst the rest of the market is just really battling. So certainly from that point of view, showing some good relative strength, not unlike some of the previous examples where we've had a long period of sideways movement, really, where it just managed to eke out some gains against the rest of the market, and you'll see every intermittently, a little bit of underperformance in compared to the market, but by and large outperforming. So really that just means that this stock is just holding up, a bit better than what the market is, hence the outperformance. And from that point of view, we're at all-time highs, we're blue sky, and again, similar to the previous example, last week's candle has just passed the previous medium-term peak. But from that point of view, in terms of where protective stops need to go, all I want to do in this particular example is make sure that wherever our entry level is, our two ATRs, which is our minimum requirement in terms of a safe stop, is well below that last medium-term trough, and it is. So again, we've got plenty of room there for the stock to move around, and from that point of view, our trigger is just 0.5% above the high of the last candle. So the high there on that candle was 114.99, so 0.5% above that level has the on-stop order at $115.56, and our stop loss coming in at 106.65. That's Honeywell International. Next one, IDEX Corp. Again, you'll see that a long period of sideways movement, and what we're really looking for these in these particular examples is once we're starting to get some strength, is breaking out of this range, coming back to retest the upper boundaries of it. So again, very similar to, we've probably got 3 or 4 examples. Well, there's my Beyond Charts playing a few funny games there. A few similar examples there where a stock has really been forming a long sideways pattern, if you like, so resting for a period of time. And what we're looking for is, obviously a strong move to the upward side. So this type of movement once we move out of the box. So that's the expectation. Whether or not that occurs is anyone's guess. The only thing that we can really do is structure a trade accordingly, make sure that we know how much we're risking on the trade, and then if we happen to get triggered in it, then just manage our trade accordingly to some very simple rules. So to place this particular trade, we need to place an order on stop at 84.51 and a stop loss at $78.15. So just zoom out just to see where we are, and again, all-time highs. So again, a very good scenario for this particular stock, and been holding up very well. That's IEX. Next one on the list, JBT. Probably a little bit clearer setup, a little bit cleaner in comparison to those other stocks. And again, good relative strength for a long period of time. Moving averages are all really starting to diverge. They've been doing that for a little while. Certainly, it's been interesting about this one is that whilst we've got this long-term peak created a number of months ago, the price has since moved really strongly back up beyond that last long-term peak. It's come back to retest it. So what was a major point of supply, pushing that stock all the way backwards, is now starting to act as a major or a more significant point of demand. So that's a good sign for this particular stock. You'll notice on this one as well that the last candle there has already passed that last medium-term peak, and again, I'm quite happy to take these particular trades, providing we still use an on-stop order 0.5% above the high of that last candle, and also that our 2 ATRs are well below that last medium-term trough, and they are, and as such, I'm comfortable position sizing according to that, given that our price action, the last trough, is well clear of that second from last medium-term peak as well. So JBT is on stop at $58.61 and a stop loss coming in at $52.21. NVR is the next one. So very expensive stock in terms of how much you're going to have to fork out to buy one of these stocks, over $1,800 worth. In terms of price action, certainly doesn't look too bad in terms of overall trend. It's been fairly consistent for a long period of time, good outperformance, and obviously through the beginning of the year being sold off with the rest of the market, but still not being sold off to the same extent, and so therefore still exhibiting good relative comparative strength. Last trough, well clear of second from last medium-term peak. We just need to breach the last medium-term peak there. So to do that, we need to place an on-stop order at $1,829.10 and a stop loss coming in at $1,679.35, just to give you a bit of an idea of where we are. Blue sky, so certainly been a stock that's been moving in the right direction for a long period of time. And again, for those of you who are perhaps a little bit more relaxed in terms of your investing, longer term, etc., again, that blue 63 period moving average works as a backup trailing stop if you find that the 3 ATR is perhaps a little bit more active than what you might like. So there are different options in the ways that you can trail your stops. Again, at the end of the day, the most important thing is that you have a stop, and when excuse me, and when it is triggered, you action your trading plan and you get out. All right, so it's NVR. Yeah, that's right, Kim. We are already in NVR. We've had another setup in NVR. I'll just go back to that one. NVR, we had a setup back through here towards middle of last year, I think it was, that we just got triggered into. And since then, if we put on our 3 ATR stop, you'll see here that price came down towards it, didn't close below it, and so therefore on that basis we're still in it. So we've got another setup in it. You're absolutely correct on NVR, which is already in the watch list. THO is the next one. And again, similar sort of story to before, isn't it? We've got a lot of these stocks that have been basing for a period of time. This one's really looking like it's wanting to come out of the rectangle, if you like, or out of the box. It's very much a Nicholas Darvis type of setup in this particular aspect. Where are we? Again, we're at all-time highs, so we've just got to, the market's just got to get behind this one a little bit more, push it out of the box, and who knows where it can go to from there. The important aspect in terms of our price action, last trough, well clear of the second from last medium-term peak. Because it has been going sideways and it's been consolidating, if you like, our moving averages have obviously moved a lot closer together. They're just starting to separate now. So depending on what happens with momentum, if the momentum continues in this and pushes it out of the box, then we're looking for, at least the width of the box in terms of a first target. So in terms of structure for this trade, an on-stop order at $65.03 and a stop loss coming in at $58.97. That's THO. TSM is the next one. I don't need the security choose tab. I can just click on the down arrow. There we go, TSM. Again, old point of supply, now starting to act as a future point of demand. Would have been nice to see, excuse me, a stronger candle last week. But again, it's moving in the right direction. It's certainly moving upwards. Had a big sell-off. You might remember August, September of last year when the market really got smashed over a couple of weeks. But it's since regained its composure, moving back up to these previous levels. As I said, would have been nice to see a stronger candle last week, but nevertheless, in terms of price action, it ticks all the boxes, and so therefore I'll pop it into the watch list as well. We do need to break this last medium-term peak at 26.75. Our stop loss coming in outside of 2 ATRs, and that puts our stop loss down at $24.30 on TSM. And second last one, UGI. Again, those of you who've been looking at the markets for a while will notice, how many of these setups have we had where we have really just set ourselves up in a sideways moving box, if you like, forming a base pattern, moving out, coming back, retesting the top side of that rectangle, if you like. Good relative strength. Now that it's out of the box, we're really just looking for a continuation move towards the upside. So to do that, we just check our price action. Price action says that last trough is well clear of that second from last medium-term peak. We're at all-time highs. We just need to place a non-stop order, 0.5% above our last medium-term peak, so that is at 41.36, and a stop loss coming in at 38.35. That's on UGI. And the last one that I managed to find is on VC. And again, I didn't need to do that. I just need to click on the down arrow. VC. Again, nice aspect about this, we've got the moving averages starting to diverge as well. A lot cleaner in terms of blend of white candles and black candles, so that's promising as well. Good relative strength for a long period of time. It has had little pauses along the way. It's obviously moved up strongly. It's come back to what was previous levels of supply, now starting to act as future points of demand. Last trough, well clear of the second from last medium-term peak. We just need to wait to breach that last medium-term peak there. To do so, we need a non-stop order at 81.25 and a stop loss at 73.99. Folks, did anybody manage to find any other setups in the US? I think there was around about a couple of hundred that I had to go through today. Kim's found one, ORBK. Let's have a look at that one. ORBK. All right, so I'll go through and put on my US weekly overlay and pop on the price action. Yep, price action is looking really good, good relative strength. All we need to do is zoom out and see where we are in the scheme of things. And again, the only areas of sort of overhead supply are these areas sort of pre-GFC, which are really quite a long time ago. So it's the sort of thing that, whilst there is a little bit of, overhead previous history there, it is such a long time ago that it's probably not certainly going to be as significant as, more recent overhead supply. So certainly in terms of price action, yeah, it looks really good. Good relative strength. Last trough, well clear of second from last medium-term peak. It's certainly moving in the right direction. The other aspect about this that, again, just purely from a technical point of view, is just seeing, really nice to see these movements where you've had, a base put in where price has found support at previous levels. It's come down, it's tested those levels before, they've continued to hold. It's found supply at similar levels. And now that we've broken out of those supply zones there, breaking out, coming back, testing the underside of what was supply levels, now acting as demand levels, it's all technically ticking all the boxes as far as a good, valid setup. The only thing to think about is this longer term peak. As I said, it's a long, long time ago, so it's really not going to have too much of an impact in my opinion. So yeah, it looks a good setup, Kim. So I'll pop that one into the watch list as well. Any others? WSO. Let's have a look at that one. Okay, so we'll just zoom out and see where we are. All-time highs. Looks very good. Good relative strength. And again, certainly looking the goods as well. And that's just purely from a technical point of view. We do have these what were major points of supply, if you like, or long-term peak area, if you want to call it that. And this particular major supply level, which has now been breached. So we've gone through that level. We're coming back. We're retesting. And again, price action, last trough. Is it above the second from last medium-term peak? Where is the second from last medium-term peak? There's the last one. There's the second from last one. So it's well clear of that. So all we need to do is break that particular level. And Kim's done me the favour there. 137.11. So I may as well annotate that while I'm at it. On stop. 137.11 and stop loss at 126.09, 126. There we go. So I'll pop that in, make that bigger so we can all see it. There we go. So 137.11. So I'll just right click on that for those of you who perhaps aren't quite yet up to speed on your Beyond charts. 137, just right clicking 11. I'll make that a little bit thicker, change the colour into blue, and then just add a horizontal line for the protective stop. We'll change that to 126 and 9, make it a little bit thicker, apply, and then what I will do exactly at the same time is go over to my analyses there, put in a new analysis, and then when that comes up in good time, Beyond charts, you'll see that when it turns green it means it's thinking. So it's going to come up in a moment with a new analysis there soon. Okay, there we go. So it's highlighted. So if I right click on that now, set it as default, and at the same time, I'm going to go up here to the watch list, and again it's gone green, so it's thinking, and I'm just going to add it to the USA weekly pendings, and I'll do that for the other one as well at the completion of the recording. All right, any others? All right, so what we might do now is just go through and have a quick look at the opens. Hopefully you're making good use of the watch list. One of the things in the watch list that's worth having a bit of a look at, there is a column there that tells you how much each of the positions is up in a percentage basis. I think it's worthwhile just going through that and reacquainting yourself with that, just to see, you know, some of the spread of the stocks in the watch list, that some of them are actually up quite a fair way. Relative to the market, to both markets. I mean, both markets, I mean, obviously our market's gone down for about the last 6 or 12 months, it feels like, and certainly the US market really hasn't gone anywhere. So to have some stocks that some are up, you know, 20, 30, 40, some are even up 80%, again, if you can do the right thing and stay in your positions according to your simple trend following trade methodology, trade management methodology, then you'll reap the benefit of being patient. So just a few trailed stops. This is one of them, AWK. Now, we've got 2 entries on this. So the trailing of the stopped little green line is in relation to our first entry, not our more recent entry. We'll get to trail that one when the our little green line passes our initial 2 ATR based stop. So that was the first one that was trailed. TWC, Time Warner Cable. This is a stock that's really gone sort of sideways for a period of time. It's now starting to move out. So again, that's type of movement. It was just a pity that once it originally triggered, that no sooner did it trigger, it just went sideways. So it's starting to move now reasonably well. So you'll see that over the last month, it's trailed its stop up a little bit higher each time, and that one trailing up again just by a few cents, but nevertheless it is still trailed. KEP, Korea Electric Power, trailing its stop as well. And again, it is just marginally 22.83, just marginally above its 2 ATR based initial stop as well. So that was KEP, and the other one, COR, which is moving, you know, quite nicely as well, particularly, you know, in relation to the rest of the market, moving quite strongly. And last week, just trailing a stop up just a little bit higher as well. So again, reducing value at risk on that. There was one stop out last week, and that was on SWHC, Smith & Wesson, and there it is, price closing below the trailing 3 ATR. So not a full 1R loss. Looks to be around about 2/3 on that particular one there. So Smith & Wesson, dare I say it, going out with a bang. All right, that's about it, folks. I think I've covered most things there. Again, if you've got any questions or anything like that, feel free to shoot us an email, or certainly jump on the blower and we'll have a chat. But until then, we will catch up with you at the end of the week for the Australian session. And then, given that we have a long weekend coming up, chances are that Fridays and Mondays I may in fact do a recording over the weekend, so we've got something to view for Monday morning. So I'll certainly notify everybody of that as well. All right, folks, thanks for catching up today, and we'll catch up with you later on in the week. Bye for now.